The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, Tuesday's trade saw a good day in the wheat complex, and that maybe spilled over and helped pull quoted soybeans higher just a little bit into Tuesday's close. Quote in particular had a pretty solid end of the session, while everything else was fairly mixed when we're looking at livestock and the outside market trade as well on Tuesday. Let's dive into some of what is happening in these markets and get some technical analysis and more from Brian Splitt with agmarket.net. He joins us here on the show. Brian, it's good to talk with you again. How are things in your neck of the woods?
Oh, doing pretty good. It's kind of cold and wet right now. We're hovering in the mid 40s, and we had some rain quite a bit last night and this morning. We're going to continue to get some into tomorrow. So daughter's graduating high school tomorrow. They moved the ceremony to indoors and cut the amount of tickets in half. So that's always fun, but it'll be a joyous occasion nonetheless.
Nonetheless, yeah. Well, congratulations. Always fun this time of year when kids are graduating high school, college, etc. I should text your colleague Matt Bennett, by the way, and find out if he's turned a wheel down there around his shop at Central Illinois. I know, thinking about the weather, cold and rainy in some areas, there's still quite a few folks who are struggling, especially the southern and eastern corn belt, and maybe some of that's getting reflected in these markets, but then again, maybe not so much, Brian.
Yeah, sometimes on a day-to-day basis, it's hard to really pinpoint exactly what it is that drove a market, and probably more often than not, it's more than one variable. But I do think there's definitely portions of the growing region that are wet right now and don't have all of their crop planted. They're starting to get behind. And even if it went dry, they probably wouldn't be able to get in the field for the next 4, 5, 6 days. So we're not at that point yet. We're right in June, but it's right around the corner. And so I think that's part of what we had as far as the corn rally late in the session, going off near the highs of the day. But we've got a little work to do. We're kind of back up to some resistance on corn, both old and new crops. So it'd be really nice to see some follow through.
Let's talk about this. And I know sometimes seasonality gets brought up here in this window as we can tend to get a bit of a rally in these grain markets from Memorial Day to July 4th. When you look at this corn picture and talk about finding some follow through with this resistance here, I mean, what stands out to you technically when you look at this corn market, Brian?
Well, I know there's producers that obviously still have some old crop, but I think for the bulk of corn producers out there, the new crop and seeing some higher values for this crop in the ground right now would be the most meaningful. And basically today we were able to go right back up and revisit the highs from the May WASDE report. And we've got the 200-day moving average right in this area here on December corn. So it'd be really nice to get some footing back over 450. We're going to have another layer of resistance around that 458 to 460 area that would be really nice to push through. Then you got your highs that we just came from at 469 3/4. That's about where the long-term downtrend would come in on December corn as we get to the mid part of June. So I'd really like to see this thing start to get through some of these previous areas that have been resistance before and then turned into support, and now are resistance again. But you're right. This market, the May WASDE report was not bearish. The starting point for new crop corn with the idea of a 1.8 billion bushel carryout, it takes a lot to get to that carryout from a production standpoint. So now maybe are we bringing into question, are we going to get all the acres in? Possibly. Regardless of whether all the acres get in or not, we should be questioning the ability to get a 181 yield simply because we've never grown one before. Can we do it? Absolutely. Could we have maybe done it last year if we didn't have that dry finish? Sure. USDA seemed to think that even with the dry finish that we had, a 180 plus crop all the way into October, November. So the potential is there, but I think directly in front of us, we're going to have that period where the market says, well, what if yield is 179 or 177 like it was 2 years ago, or 175. You look at maps for the next 30 days of precip, and you've got a lot of areas that are going to be, 1.5 to 3.5, 4 inch deficits during the month of June. And if that's what we're looking at in June as we get into July, I do think you've got some potential for some excitement. And I think the old crop carryout's going to be drawn down further just by continued way of exports. Not to mention, if there is maybe some positive news that comes out of a deal with India, that would be positive for ethanol. So I think these are all things that could be right in front of us. And the funds just got short. And I don't know how comfortable that's going to be over the next 30 to 60 days.
And that's a couple key points you mentioned there with the fund activity getting short here in corn. They've done that fairly quickly, I would say. And then you throw in the demand picture here. And to your point, I mean, demand for corn has remained pretty good here, Brian. So what happens, theoretically, if we do have a smaller yield in that high 170s or even potentially lower if we have a weather problem? I mean, that's all, skepticism, but just thinking about all those factors together, I just feel like there is some bullishness under the surface here of this corn market if certain factors come together. Am I saying that right?
Yes. And this is the time of year where the market just generally tends to get worried about those things. Not to mention, you think about a year ago on the May WASDE report, USDA suggested we were going to be at a 2.2 billion bushel carryout. And we had a heck of a crop, right? We didn't have the 181, but we had a 179. What was it, 0.3, I believe it was for the national average. But here we are now, we're at a 1.415, right? So that's nearly 800 million bushels. And so Mexico is still something to watch, because if we continue to stay dry in Mexico, that was, I think, part of why they've been buying so much corn. They continue to have drought in Mexico. So if they have another problem with their crop, I think that really just solidifies the idea that we're going to have a strong demand base for corn, for the next marketing year to come. So that the Mexico weather plus our own domestic weather is very important moving forward.
Can wheat be the reason that corn gets through some of this technical resistance, or does wheat need to be the topside leader here potentially? I know a strong day Tuesday, pretty solid. I think we hit some multi-session highs at a few of these wheat contracts. I mean, does wheat need to be the leader here to help corn out a little bit, Brian?
I don't know if it needs to be the leader. It'd be wonderful if corn was just a leader on its own, but I think wheat at least needs to not be an anchor. Mm-hmm. But today it definitely did lead. And so what did we do today? And this is true for both the HRW and SRW contracts. So your Kansas City wheat and your Chicago wheat varieties. We basically, in the month of April, had a really nice trading range for a little over half the month. And then it was kind of in that later part of the month that we started to get some rain in the HRW growing regions. The idea of production going up was priced in. We took out the lows that were made earlier that month. And so that downtrend that started in late April, we got through that downtrend today, both classes of wheat. So I think that's positive. We're back above the 10-day moving average, which a lot of times when we close above that, now we want to see if the market backs off. We want to see the funds continue to buy against the 10-day moving average. To me, that shows their intentions to continue to short cover. I would venture to say that with the amount of buying that we saw today in wheat, we're probably going to see the open interest numbers come down. The funds are just extremely short, not only from just a sheer size of their position, but also for this time of year. They're way more short than they typically would be. And it's not just the domestic wheat. We talked about HRW, SRW, and then let's not forget spring wheat. But then the funds have also been extremely short the Matif wheat, the French milling wheat. So you've kind of had all classes of wheat, not just domestically, where the funds have been very short. So I think the market's absolutely ripe for short covering. How far can it take it? I don't know. But I think there's a very good potential that if we could get, let's say, the hard red crop, the new crop July contract back over the 550 area, I think we're going to go right back to 580 and retrace a pretty good chunk of this break that we just had. And so I think 550 is kind of the key here short term. We're going to be butting up against it if we rally another dime. Might be a tough area to get through, but we'll hopefully get through that and help corn out.
We're having a conversation today with Brian Splitt from agmarket.net here on Market Talk. Brian, let's Go over to this soybean complex. Your thoughts there, and I think we were talking about this a bit off air. I think the term I used was a little better than blah. Is kind of how this soy complex has turned here after a few weeks where we were having some positivity, and then I think that RVO skepticism news kind of hit the bean oil market, and that's really kind of slowed down the momentum here in soy. I mean, what's your feeling as you look at this soy complex as a whole right now?
Yeah, I mean, you kind of nailed it a little bit better than blah, maybe just blah. There's been some excitement here and there, but go back to April 1st and look at where July soybeans were, and it's right about that area, right? So we've had some breaks here at the beginning of April when we talked trade. Then we had a rally when we got excited about the RVO stuff, but really the market's been going sideways. But I do think since we had those April lows and the funds have gotten long soybeans, I wouldn't be surprised that there's maybe some of the recent lengthened soybeans is tied to some of the recent shorts in wheat. And so I think that's why on some of these given days, when you've got wheat and corn higher, why the soybeans are having a hard time participating. They're already at the upper end of their trading range. And you think about, corn and wheat and where we were earlier this month, it was worse than blah, right? We were making new contract lows in wheat and corn was getting very close to contract lows and revisiting lows that we had as recently as October for monthly lows. So I think the soybean market is probably drying up on some of the buying, and maybe some of the interest is going to come into the other two markets. I wouldn't be surprised if this bean market did back off a little bit in the short term, especially if we talk about, the idea of maybe some corn acres having a hard time getting in. If that story persists, then we're probably going to see some of that eventually end up into bean acres. That might take some of the heat off the balance sheet a little bit. But in the big picture, as we get into the growing season, I think what we talked about for corn holds true for soybeans as well. We're just getting into that period where if we do start getting an idea of hot, idea of dry, if that comes into the focus, the market's going to want to price in some risk. So, maybe we've got a little bit of short-term downside if there's the idea of additional acres, but big picture, we start talking about some concerning forecasts. The market's going to want to go higher across the board.
All right, let's go over and talk to cattle complex. Kind of choppy to start off the week here, and I know we had a pretty key reversal last week before we tried to get a bit of a bounce into the weekend. It just feels like this cattle market is quieting down potentially here. But what are you seeing when you take a look at these charts, looking across both live cattle and feeder cattle, Brian?
Yeah, so you mentioned that reversal last week, and I think there's something interesting about how that reversal kind of panned out during the course of the day. Because initially, early in the morning, I think people were looking for a high to be made kind of short term. We're waiting to sell it. And early in the session, when we made that high, we actually took out the previous day's low first. And I think we ran some stops, got some people short. Then we ripped and went out and took out the high from earlier that week. I think we knocked out a lot of the weak shorts, if you will, where they had stops above that previous high. Just then to the end of the day, go and make some new lows and really seal that reversal. So a lot of times, and you can go back the last two kind of breaks in cattle, what we'll do is we'll break through that 10-day moving average, and the market will try to bounce back up to the 10-day. And if we see the 10-day selling come in, and this would almost be the opposite of what we talked about earlier in the segment in wheat, right? When we talked about short covering in wheat, hopefully the 10-day is now that guide higher. I expect that the 10-day is going to be resistance on June cattle. We failed right near the 10-day on today's highs. So we have to get back above that in order to feel like that reversal was just a short-term deal. My concern is if June cattle fail the 10-day, then get below 210, then we're probably in store for a break similar to what we just saw on the last two breaks, which is the market went up, made new highs, pulled back about $16 off of that new high. So this recent peak was what, 218.67, I think it was. I think this market's probably primed to get back down around the 202, 203 area. Not to mention, if you look at the last two breaks that we had in June cattle and draw the uptrend from those two breaks, comes in right around 202 at the end of the month, which is also a 62% retracement of this last leg higher. So again, from the size of the last couple breaks, where major support comes in from retracement and uptrend activity, I think low twos is probably likely short term. And remember, April did the same thing. It broke into the early part of its expiration month just to absolutely rip higher into expiration because cash was still extremely high. And we've been doing that over and over where the futures become discount to cash. And then everybody's like, why are we here? And we go back up, and maybe cash is making new highs at the time. So one of the things we have to watch out for is when that pattern stops, when the market doesn't rally to cash, when we see cash come down instead, then we've got a change in the behavior of the market. And so we're going to keep watching for that. But at least right now, I do think that was a short-term meaningful high and that we probably have some more downside to go in cattle.
Well, and to your point on the cash side, I mean, we haven't seen much activity yet this week, but I know last week we were fairly steady. And I mean, it just doesn't feel like, anyway, from what I'm seeing and hearing, that this cash trade is wanting to take a pause anytime soon. But then again, the way this market has gone, I wouldn't be surprised by anything, I guess, with the way this cattle market is traded here, Brian.
Yeah, I mean, all we can do is kind of use some of the previous behaviors and some of the momentum that it's had and some of the previous, ways that we've reversed to look for some of the short-term pullback activity. But, I don't know what it's going to be that makes the market actually top where we have a more of a cataclysmic type of a break. We had one in 2023, and that was September into December, and that break was really, really harsh. So I think something like that is going to come again eventually. Like I said, I don't know what the reason is going to be. It's probably something we don't know about, and it may not even have to do with the cattle market itself. It might be an outside indicator or something like that. Stock market, who knows? But there's a lot of risk, in these markets when you're talking about new record all-time highs. Doesn't mean it can't go make new highs and see the market continue, but if you're participating in this, you definitely have to have some kind of coverage.
Very true. Was there anything else on the feeder side? I know, we put that 3 print on feeder futures and then we kind of backed off. And it seems to me now that's probably going to be our psychological area of resistance again. I don't know, Brian, what do you think?
Yeah, poke through 3. The difference in feeders versus live cattle, the gap is still open. We had gapped lower. We haven't closed that gap. And the feeder market seems to have a little bit more of a difficult time recovering. So we've been getting a little bit of a bounce in live cattle. Maybe another thing to bring up is there's been more bounce in the kind of the back months. Your October, December is bouncing more than your nearby. There's been a little bit of bear spreading, so maybe that's not a very good sign either. But the feeder market just hasn't been able to get as much recovery going. The gap is still open. And I'm concerned if we start pushing through these lows that were made here recently, that the feeder market's going to be, quite a bit lower here. Same thing goes. I mean, you've got some new extreme record levels, and a lot of times when you reach that new price, especially when you get a big round number like that, like 300, undoubtedly running stops through there, market's probably ready for a pullback.
Anything you're paying attention to in the outside markets as well here this week? Things pretty quiet, I feel like, to start off this week. But when you look at stocks, energies, the dollar, et cetera, anything on that side of the ledger you're paying attention to, Brian?
Yeah, you look at S&P, and this has been a really, really strong recovery in equities. Yesterday, it was, I believe, I read that there was biggest amount of buying by retail ever at 4.1 billion of U.S. equities. And the S&P kind of got back up to a shelf. So when we were making these record highs during the winter months, prior to starting to get into the tariff talk and whatnot, we were trading, where the lows were right around 6,000. There was one meaningful low at 59.93, and that was actually the high we had last night for today's day session. And now we're lower on the day. So I just wonder if maybe you didn't have a lot of retail money come into equities. Maybe that's a short-term high. Did retail buy a short-term high? Wouldn't be the first time, right? But I think maybe, the lows that we had in April, I think those lows are probably some very good, strong lows. I would be surprised if we actually take those out. But I do think we're due for a correction. And there are some gaps on the S&P below the market that could very well be some short-term retracement targets.
Awesome stuff, Brian. Anything final you would mention or reiterate to folks as we close it out today?
No, it's just one of those things where you know what time of year it is. This is the time of year where generally, if you've got bushels that you need to actually sell, or hedge, the next 30 to 60 days is generally the time of year where you are going to get that done. Your best opportunity. Maybe we can revisit it sometime next fall, late fall, or in winter. But for a lot of you that have bushels that you need to sell out of the field, those bushels especially, you need to have a plan for. I don't think having some out of the money calls right now would be a bad idea. Something where if we get a rally in the next 30 to 60 days, you can make some sales and have that as a backstop and still participate if the market goes higher. Maybe turn those calls into some puts and use the money that is made if the market rallies to put a floor under some bushels. So I think it's right now it's laying the groundwork and just kind of getting an idea of how you want to handle your marketing in what we hope is going to be some good opportunity here shortly.
Brian, I know if folks need a little bit of help handling that marketing plan, want to have a conversation, a phone call, looking at your guys' website, a lot of great ways to get in touch, isn't there, Brian?
Yeah, www.agmarket.net. You can go 844-4AGMARKET, so 844-424-6758. If you want to talk to me directly, 815-665-0463.
Brian Splitt, agmarket.net. Always good to hear from you, my friend. Have an awesome holiday weekend coming up, and we will talk to you again real soon. Appreciate the time.
Thanks, Jesse. Appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.